As we grapple to come to terms with the increasing numbers of COVID-19 cases around the world, strict government-imposed restrictions to prevent further infections, we also have to adjust to what feels like chaos in the financial markets and the economy. We have observed heavy standing pressures across markets, record low rand-dollar exchange rates, negative economic growth, potential job losses, looming credit rating downgrades, and so on. It certainly feels like the perfect storm. But while we can't control the storm, we can control how we react. How you react will fundamentally affect your wealth. Hi, I'm Marilize Lansdell, Managing Executive at Nedbank Private Wealth, and I will be taking you through the latest financial developments in a series of videos on our social media platforms, while sharing some ideas on avoiding panic-induced financial actions. Avoiding permanent wealth destruction with a defensive and diversified approach in SA and internationally is our priority for clients in the current environment. We continue to focus on a well-considered, long-term investment approach to help our clients get through this and achieve their goals. Is the worst over? Probably not. So this is what we are doing in SA and internationally. Firstly, in South Africa we have been concerned about valuations for some time and have therefore entered this period of volatility with higher cash levels than normal, which has mitigated the downside somewhat. We are well diversified across asset classes, industries and geographies. Our portfolio holdings are currently more diversified than they would typically be in a more stable economic environment. We are working at separating out the difference between the short-term impact of the latest events versus the long-term structural effects. This recognizes the possibility that some business models could be at risk of longer-term disruption as behavior and preferences change, resulting in a negative impact on the longer-term earnings power of companies. The volatility has made valuations attractive, and we are looking to add to risk assets at an asset class level and enhance the quality of portfolios at an equity level. Notwithstanding a fluid backdrop, we believe the current environment is presenting a rare opportunity to own assets that will generate value for our clients over the long term. The choices that higher cash levels offer means we are well positioned to take advantage of these opportunities. Internationally, coming into the crisis, our portfolios were underweight equities and bonds and overweight specialist property, alternatives and cash. While valuations are becoming attractive, we have held back on committing new capital as we assess how long and deep the recession may be. We are still concerned that the Trump administration is behind the curve, and we would like to see a credible fiscal package being put in place. The markets will start to recover long before the economy reaches its trough, and we cannot expect to time an increased commitment to risk assets perfectly. Currently, we are working on defining a series of trigger points at which we would make phased commitments that are linked to seeing progress with respect to the US fiscal support, a stabilization of infection rates in Europe and the US, and deeper undervaluation levels. Previous market cycles reinforce the importance of staying the course at times like this. If one considers the global market volatility, it's hard not to be swayed by emotions to try to time the markets. The news cycle in social media amplifies screams that this is the worst combination of events ever seen. This time it is surely different. Get out while you can, and so then must you respond differently. Because we know for sure that many investors do join bull markets late and sell late into bear markets, thereby buying high and selling low. Doing something different means 1. Speaking to your wealth manager. 2. Reviewing and adjusting your short-term spending and other personal finance decisions with your long-term wealth management goals in mind. 3. letting us adjust as necessary within your portfolio. And 4, sitting tight for the market cycle to turn, as it always does. The most important thing I can say to you at a time like this is that you are not alone. We are here to help. We will continue to do our very best to be available to you, notwithstanding the physical constraints we are all doing our best to adjust to. Please contact your wealth manager via email, the messenger function via our app, or by phone, and know that we are here to answer any questions about your wealth and personal financial well-being. We wish you and your family health in these troubling times.